this is a continuation of my backtest from the other day. It's mostly just to explain certain concepts I have, or not even explain concepts, but walk with you guys through my thought process as I trade or as I backtest. It's important to be honest with yourself and there's not bullshitting, because you can't bullshit your bank account or your P&L when you actually get live. So the first step I always do, no matter what the asset is I look at my highest time frame, which for me is the 3 day, and I just look to see if price is delivering from literally any type of range. It doesn't matter what it is. So, for instance, this range at one point would have been fine. The little doji candle range here would also have been fine, and then the move over there would have been fine. Effectively, any down move followed by an up move that broke the high, or vice versa on a bearish market, any up move that broke the down move on the low. And then, so if I can see, yes, clearly delivering from this high right here, I'm happy to drop down to my middling time frame, which to me is a 6 hour. And you don't have to worry too much about my multiples or whatever. The point is you just need to understand this is what I do. There's nothing special about these particular time frames, but they share a relationship in each other in terms of multiples that makes the information I can see on each time frame make sense relative to the prior, both down and above. So the high was broken, whatever. Now we can see what I would consider some sideways action, stage one, if you will, before hopefully some sort of stage two delivery that becomes a one-sided vertical delivery if price wants to do that. So I have my own rules for why I would not trade these, as these do not meet my momentum criteria for a good tradable condition. And let's just wait for that to happen. So we're getting a bit of a fractal stage one again. And when it hit the 5, it was okay, to be honest. So we could look at it, but it went too deep into this. I'm not willing to trade that. So I'm just going to leave it alone. And then we get what clearly looks like momentum. You don't need to understand anything to know this is clearly momentum. So this, I'm not going to say you can't trade it, but I wouldn't. It looks a bit choppy to me. It's too deep into the other range. I even have a bit of rule here where if you look at the, I guess you could call it origin point of the move, the accumulation phase of the move before the one-sided delivery, it didn't really go very far and it came back quite low into the area. So I'm not a fan. I would not personally consider that momentum if you consider the word momentum literally. This, however, is clear as day. So if it pulls back a little bit to the 5 EMA, well, it just keeps going. Um, no, there's nothing there, still nothing there. Okay, so now that it's come back to the 5, I'm willing to look for entries. So what I would do, nothing fancy about it, I draw a trend line from the most recent low, which is, in my mind, the accumulation point before the one-sided move, and I draw it to the point where it connects to the 20. Now at the 20, at this point, now I'm in my 1 hour time frame, which to me is the second lowest. So I call it the entry, but in actual fact, I have a time frame below this called the E micro, which I use for real entries. And these are not concepts I came up with myself. I learned somewhere else. That's why the jargon might be familiar to some of you who know METFX. But I've added my own twist, my own interpretations, my own spin, my own systems to it to make sense for me. So now that I've got this little support line down here, the reason I draw that, by the way, is so I can have a quantified measure of what I refer to as a containment line. So I draw fib, I connect the point 3 to where the support line meets, and anything above here or at the line is clear to trade. Now, the line is basically useless here because it's not filtering out any price, so I don't really have to care about it. But there are certain types of structures where it would filter out tons of price and you'd get to miss out on a lot of losses. So here, what I would consider a high worth validating to look for a double MB entry would be this. Or if you want, you could actually use this. So if price now wanted to do something like come up here and then down and then here, you could buy that. That would be perfectly fine. Now I'm going to use this because it feels more striking to the eye. There are no hard rules about this. The only hard rule I have is it has to be above 10 EMA. Both of these are fine. So I'd rather just take a swing. And we got nothing. And it looks like it's hit below the 10. So it was still valid technically because I would consider this in line with momentum expectations given the cycle's nature. And it see nothing. So something very important to note here about why the 10 EMA rule exists for me is this here, this criteria would not be met here, even though the actual price, if you remove the EMAs, looks the same. You have this up move after a down move, and then you have these little fractal blocks. But if you look at how price interacts the averages, here it's above average. So for me, validating that high would put it in an above average position. However, down here, it's below the averages. So price is still not even caught up to the average move. If I'm going long, which is the expectation because of the highest time frame, that is a short setup. Not even a setup, it just doesn't work for anything. So I'll just ignore it. And I'm gonna wait and wait. So technically, if I wanted to look for that same setup, it would actually be here. But price is so far away, it's not gonna happen for a while. And then by the time price could come up to that, I would have new highs to look at, something like this. Okay, now I'd have to double check the 6 moving average to see if it's hit the 20. See, now I would still say it's okay, but you're pushing it, right? So this is quite different in terms of momentum, how deep into the channel it reached relative to the previous one. If you didn't take it, it'll be fine. If you did take it, I think it'd also be fine, according to my rules anyway. So yeah, I'd be fine with it. At this point, I'd remove the trend line or support line. And here, I believe you'll see why it's useful at times because perfect, this perfect illustration. So now I can't enter here, even though the price action is the same. The overall picture of the move and where we are in the range and how the averages are moving is not in line with expectation. See, okay, so now let's double check the middle time frame again, the V time frame. It's still fine. It's not touching the 20 EMA, and this high is no longer relevant because price went through it up and down, up and down, up and down. And at this point, I would consider this a three block sequence, right? And this is effectively extension because what you would expect if you imagine it like this, what I would expect now is either is some form of this, right? And I want to get in on this. Now, I'm not saying this will happen, but I won't be involved unless it does. Some variety of that. So let's see. Okay. It's a bit tricky to read this. I'm going to remove this because I roughly know what I'm looking for. Did it flashed here? Yeah, I'd wait for price to go low. You could. So if you wanted to, wait for like, if you were at this point and you wanted to use this, or even this, to be honest, you could and you wouldn't be wrong for it. So you might look down here on this is my real entry time frame, despite what I call it. And then you might buy this, right? You could. And then with my rules, I think this might have been like a nah, it's not break even. It's the 18 months. Yeah, so this would be not yet. This would, I think would be a loss if I took it. You could. I'm not saying you can't. You could. And if you took that in live, you might think in hindsight, maybe I could have avoided that, and probably be right. One reason to think you should avoid it is probably just how close it is to the 20 moving average. But likewise, you could have just waited for price to flush because it's flush on this like almost false high because it was already extended. But if you waited for this one, you'd be fine. And then, okay, so I would look to this high. And it just never happened. Then price came down to the 20. So notice how with the rules, you can avoid tons and tons of losses, okay? Now, granted, some of this is what debatable. Maybe I'm not, because sometimes we almost forget very small minutiae of our rules. I try to write them all down as much as possible and refine them and crystallize them in a way that's really easily referenceable. But I'm not perfect, so long as I didn't take those trades and I feel confidently honest with myself that I wouldn't take those trades in live, or I might, and they still wouldn't damage my overall expectancy because I have a mental buffer, you could put it, for adherence. So if I can adhere to my trade system 80% of the time, and not from emotions, because a whole other case, but simply a misreading of the data. So You might look at the wrong high and in hindsight be like, you know what, that probably wasn't the correct high to look at. And it's something you could have done better on in the moment and it had nothing to do with emotions because those are two different problems. If you have emotions as your primary problem, you need to address that with more work, more diligence, more reps, more evidence, and calming the fuck down. The technical side, you have to accept you're never going to have 100% technical execution accuracy. It's just not possible. 80% and above is fine. It's kind of like the gym. You're never going to have consistently banger workouts day after day. You're going to have off days, and you kind of just show up. But it is what it is. So anyway, returning to the price, now we're back in sliders action. So we've completely lost the momentum. I don't think I even need to explain to you why on a technical level that's the case. You can see the average and blah blah blah. But if I removed literally all indicators and you just see price, you can see this very clearly vertical column, and you get now the sideways block that looks a lot like this one, right? So what we'd expect if we want to have continuation move is basically some variation of this. And let's just check the high time frame again to see if it's delivering. It's no longer delivering from a range, right? Because it pulled back. So I would only want to realistically trade during this candle, right? So we'd wait. And this would save us a lot of money. Okay, and there we go. So whenever price cleared this high, and I will only enter trades that exist above that line because that's the higher time frame validation line. And let's see. So there would have been a very small window of time where I would have bothered to look at this, and I don't think that would have been the setup. Yeah, there was no setup. And I'm just keeping in mind this line because I know roughly what price on the 3 days, so it's still valid for me. These are minor pullbacks. Once you get enough experience watching charts, you kind of understand the time to subtract. And we just finished a USD JPY. So at least from where I was on my previous session. So let's just move on to another random pair. Uh, let's see. Let's go Japan, right? And based on my system, I need the furthest date I can access rather, and that's going to be January 7th, 2025. Okay, let's look at the high time frame. Let's see what it's doing. Complete shit, quite frankly. No, it is actually a bit more playable than you might think. So this is bad because price keeps doing half-baked deliveries, but I know once again from experience watching charts and watching shapes, probably had very few entries to begin with, even the lowest, because they would just keep instantly failing. But it's fine. Just to simplify my adherence, there is possibility for refinement. I could add rules around ATRs and maybe a new indicator and whatever to filter out good delivering higher time frame blocks, but I keep it really simple. Down moves and up moves and then validations of those moves. So I'll just take a look at this. That's the range. If you want to, you could also consider like, well, I was going to say the overall range, but it's the same fucking thing, really. So just wait for that to happen. Or if this price starts to flip, let's see. Because I don't need extra confirmation flip. I just need it to be above the averages and I need it to be clearing a range, delivering from a range. So if it wants to break that high or break that low, okay, for honesty's sake, I know what's going to happen. Nothing, because it instantly collapses. So I want to trade this because it's not cleared this high yet, and there was zero transfer entry. So we'll go back. Very simply, just go back. Since trading we just have crashing out, still nothing. No range has been delivered from. Now we do. Now we do, right here. And let's see what happens. Now, once again, if you wanted to be super conservative, you could just choose this high to be broken, but I don't really see the point in doing that. I wouldn't trade this because this MB is, well, this block is below the validation point, you could. I'm not saying you can't. I just choose not to because on average, I have a lower positive expectancy on these types of trades as opposed to other trades, and I want to keep my drawdowns low. So I'm not actually just purely focused on my raw RR gain. I care about my drawdown levels and the average drawdown because it allows me to take on larger percentage risk if I keep that low and only take higher quality setups. And psychologically, I prefer. I hate taking losses. Shoot me. Um, so I would just ignore this. And looks like it would have paid off to ignore this. So this is exactly a perfect example of what I mean, where this setup, if this occurred up here, I would have 100% taken it. Just even if it was just a few pips higher, I just want the point of entry to be above the validation of the higher time frame. And I would have got involved assuming the other conditions lined up, but they didn't because I didn't even bother to look. So this would have saved me. I would have 100% got dropped out. I think this is short. Yeah, this is a short position. If this was, I'm used to visualizing the bullish side, so I was putting my chart, but this is a short position. If I wanted to take this trade to go this way, there's no possible way I would have survived all this chop. It's just garbage, right? Unless I had a huge stop, which I don't. I had tiny, tiny, tiny stops. I would have got obliterated by this price. And maybe I would have entered multiple times or whatever, trying to force the direction. You might be thinking, oh my god, my stop keeps getting hit, but I'm right about direction because look what I did. Like, okay, of course you're going to be fucking right about direction. 50-50 chance of going up or down. The point is timing. So there's no pride in being right about direction. I could throw a dart and be correct about direction, flip coins and I'm correct about direction. It's irrelevant. It's stupid. Anyway, we'll take a few more entries and then we'll wrap this video up. So we'll take any entry. Actually, I'm taking a single entry, which is a lesson in itself. I would consider this a very high quality backtesting session, personally, because I've taken the trades, which means I have an effective filter, and none of those trades would. Here's another thing to know: if you replay the video and you look at every single moment of price we looked at, there was no case where we missed a potential move on price. Okay, there were a few moves we could have got involved in that would have turned out to be losses. We didn't because of the rules we have in place, but there were no rules that kept us out of a winner. And it does happen, don't get me wrong, but in this particular instance, it hasn't, which tells you the rules are working. So let's see if we'll take a trade here. Personally, I'm just not looking for trades here. Now, once again, I could draw the trend, the support line and be like 0.3 fib level, identify the filter, blah, blah, blah. On this shape, it's useless. So I'll do it just for illustrative purposes, but I know for a fact this will do nothing. Oh, actually, you know what? Maybe I was wrong. Yeah, okay. Damn, sue me. I was wrong. Didn't expect that. Whatever. Um, yeah, because originally I might look at either this high or this high to be cleared, and then like on the pullback get something in there. But it was too far away from the containment line, so I just would leave it alone, and it would have saved me. So it's a good thing I drew that line. Now we start to enter questionable territory, perhaps, because it's getting pretty deep into mitigation. Yeah, I would not consider this valid. And you might think, oh, but it went up. And you'd be correct. But here's the difference. I would now consider this as part of a larger accumulation cycle, not a momentum cycle. I only want to get in on momentum cycles, which is something I'll hopefully break down in a future video, but we'll see. Still absolutely nothing. I want to take at least one trade, win or loss, before closing out this video. Let's check the higher time frame again. It's failing to move, no delivery point. You could argue this, I wouldn't. Actually, you can even argue it's below the averages, so it's irrelevant. There you go, another filter. There we go. Now we have very nice delivery. And notice, by the way, I think we started around here. Was it like January 25? We started looking at price here. Zero entries, right? And like even during this, it was unclear price action and there were no entries to be had. Because if you look at where the line existed, right? Price close. How the fuck are you supposed to enter here? Does this look one-sided to you? Sure, the direction is still, in trend. If you want to have a fat stop loss and tiny profit, you can. We'll talk about why that's not a very good idea in the future. But you're trying to be rich, you're trying to be right. You don't want to enter on this price action. You want to enter on this price action. And you might think, oh, but why didn't we enter that? Because we have to give up moves like this to miss more moves like this. Overall, for my testing and my system, this is more EV positive to stay out more. If your testing reveals otherwise, go right on ahead. But for me, this is what works. So let's see. I'd ignore this, and I would have been right to do so. And let's look for the next time it touches the 5 EMA. So it needs to plus the 5 on the V, on the middle time frame, and then the 20 on the entry time frame. For me, these are exponential averages. Now, this is not clear because not only does it have to hit, I want it to hit in a particular way where I just call it a peak and slow pattern. So I just want price to, if this was the MAs, I want price to do this. Basically, this is the shape I'm looking for. This does not look like it at all. This is just that. Like, what the fuck is that? I'm not interested. So I'd wait, and I get no entry, and I feel nothing because this is not even something I'm used to seeing in terms of validated entry criteria. So you might be like, oh, how you could have got in here? And you're right, you would not have got stopped out, but you need to develop a system that allows you to catch trades like this without catching more losses and potentially missing other wins. And there's a trade-off to everything. That's why it's called the edge, not a solution. Right? If you just had the market formula down on pat, then yeah, you'd be making infinite money all the time, but you don't. You have an edge, something that works positively over time. Not going to work every time. Let's see. Okay, so this is much more what I had in mind for the peak and slow pattern, right? That's what we're looking for. So let's have a look at the middling time frame to see if it meets my criteria. I will rewind price a little bit to see, but it's admittedly tricky, so I would not consider this momentum. Even though it looks like it, I wouldn't consider momentum. Although you could kind of, you could get funny with the counting. So you could, as a placeholder, consider it either accumulation or momentum based on how it interacts with the averages. And you could say, well, depending on how the rest of the price maps on, we can decide what makes more sense to count as. Um, and there's been no momentum checks as far as I'm concerned. Now, this is price I'm not very confident in. I'll be perfectly honest. The way it collapsed instantly is something I'm not very comfortable with. But very simple solution to this. The containment line. It's a great filter. I wish I could take credit for coming up with it. I can't. But I do have my own spin on it, as I said. Now, there's two ways to draw this, either from the absolute lows or just like a line of best fit. I like a line of best fit because it stresses me out less and it leaves less room for guesswork in my mind. And I just draw like this. Now, the fib, I always draw the whole range, not as a best fit because that's more complicated for me. And this is useless. So in times like this, what I'll do is either just accept that I can enter whenever, or if I'm really hesitant about price, because I'd rather miss out on a win than take a bunch of unnecessary losses, I'll just draw it like this, right? Just to filter out a bit. So either you can do it with highs if they exist, technically they do in this case. Otherwise, you can use it with like the 0.5 line in where I meet, or the 0.38, but that doesn't do anything. The purpose of this line is not to be hard and correct; it's to be a filter. If it's not filtering anything, it's literally useless. So it depends. You don't always need a filter. That's where your experience comes in with the system. But in this particular case, I can sense, based on how sharp and jagged the moves are away from averages and the distance from the averages, that we're probably going to have some back and forth. So I want to filter. Because, once again, point three, all of this has been valid. Analysis. Like, a valid region of analysis, I should say. So based on this price action, I would probably consider this to be a high if cleared, worth looking at. And it looks like we're going to hit the 20. Not yet. I should add that another way to, if you find it doesn't fit, then you could just do this, which in hindsight kind of makes more sense actually. If a line of best fit doesn't tell you anything, use the extremes. And there we go. It might be at the 20. If not, we'll rewind price and look at our rules because I trust myself and you should trust yourself to be honest. And no point looking at it. Now this video is turning into bit longer than I had expected. So if at the 30-minute mark we don't have any new trades to take, I'll just call it a day. Now, I would not, okay, very important demonstration here of what can go wrong. I would not consider this delivery from a range. This is a pullback from this move, right? This is not delivery from any range. This is a pullback. What I would need to do to start trading this direction, because I'm still technically long, although that doesn't really mean anything if I'm staying on the sidelines, is I would need this to happen. It doesn't matter how big, it just needs that to happen. And it can happen down here, it can happen up here. I don't really care. It's above the averages and it's delivering from some sort of range. The criteria I have with the lower levels will filter out any, shall we say, like noise. I hate that term so much, but I can't think of a different term here. Noise data. So let's just wait. Oh, this is way too small. I would not consider that a pullback. Any one of these white candles? No. Yeah, okay. Let's see if I missed out on any trades there. Nothing. Okay. So the price originally technical validated here, but I would not have entered anything there. I know that. Blah blah blah. This I would have entered so long as it has not entered the point 0.7. Yeah, that's fine. So another rule of mine is I can't have a new momentum block enter the 0.764 region of the previous block. Now, there is no fancy logic to the fib levels. I just know fib levels sort of work for some people, so I decided to use them, and the tool is right there, so it's convenient. And I chose random numbers that seem to roughly map onto what I like to see. So there is no logic, there is no magic to it, there is no secret formula. It's just I chose numbers. You can choose 0.8, you can choose 0.7. I don't care what you use. Just for me, I like these numbers. And I'm hoping that maybe I'm garnering a small edge from fib working in some sort of magical way. I don't understand all the math. I don't really care. I'm here to make money. So this is fine. So I'd rewind price a bit and I'll take a look at the lower time frame, and I'm fairly certain we will get an entry this time. Just so how price looks. So either one of these are fine. Now, this is off of personal discretion, so it can get tricky. I want to use this high. And you might think, well, why is it not above the 10? The reason for that is because when price does come to reach that high, now it has to come above the 10. I don't want it to go above like I don't know, the well, there's actually no moving average above the 10 right now, but I don't want it to go so high away from the averages that it becomes almost a different move and the move's already happened on that level. Okay, oh, perfect, right. So how I'm seeing this, I'm seeing block one and then block two. And I want to get in on block two. So what I'm going to do is drop down to my actual lowest time frame. And there's two ways I can approach this, right? So either I can just enter on the whole range with half ATR, so it's 36, something like that. No, 37. I don't care too much. It's roughly half the ATR of the 1 hour time frame, which is my entry, but this is my true entry because the micro. Either enter on the whole range, and my stop stays the same regardless, or I can find a tiny structure. So if this gets validated, I'll buy it. It doesn't, and price is really ugly because we're on low time frames, so we have low liquidity here. But I'm willing to buy it. I'm willing to buy that, and I've taken a screenshot. I put that on my Excel sheet for tracking purposes, and I'm too good. So, notice how many trades you missed, and how the moment I decide to get involved with the trade that meets my rules, we get an instant delivery. That's a really good indication that you're with the institutional order flow. If you get instant delivery, you're good. That's so I've taken a long time to run my system so I can get to these types of trades. That's what I like. I could have a much higher win rate with a much larger stop loss and much lower EV, but I don't want that. I want to be precise with my entries. I want sniper entries. And I'm not saying this is going to win, but we've broken even on these rules. For me, I break even hard at 1, and around like 0.5, I'll move my stop to halfway up or like some sort of protected candle, so it turns into a half loss if it goes wrong, right? And we'll see your price does. Instant break even, right? That's fine. A 1.6. And you might say, oh, but it's still going, so like a break even rules are too harsh. That's just how it goes sometimes. It's just how it goes. And my instinct, based on doing this a lot, is this is the result of some weird fluctuation in liquidity because it's such an outlier compared to all the other candles. It wasn't a trend that hit down, it was just a spike. And then it continued to deliver. So all the sentiment was correct and everything. And yeah, it's unfortunate. And you might say, oh, well, I don't want that to happen to me, so I want to share my rules. And well in your rights to do so. And you'd be in for what is currently a 9 RR runner. But I'm not part of that move, and I'm perfectly okay to not be part of the move. And don't get me wrong, in testing I'm fine. I'm quite upset about it in a live. But that's just how the game goes. So anyway, yeah, I'm gonna wrap it up today. I'm assuming no one has seen this video. But if you did, cool things happened. Um, yeah, if you have seen this, I hope you learned from it.